Welcome back to STA Club.
This is Minghan here. Hope you have a restful Labor Day. Just doing some research, preparing for some market watch and YouTube videos. So I thought I'd like to share with you guys. So usually I will like to trade based off the technicals. And if I find a gem in a sense like fundamentally it's also strong and technically it's beautiful, I would usually recommend to my clients. So just want to share some trades with you. These stocks are nothing new. I think all of you guys know about Google and Meta, but just want to share with you a different perspective. Hopefully you take something away. So one place to go to read the earnings script of Google is Motley Fool. You go to Motley Fool, you can find the Google's earnings call transcript, or if you have time, you can listen in to their earnings call. And one reason I like to use TradingView, which is the charting platform, is if you see this lightning sign here, these are the recent news that you can see on that day. Or if you look into it under more news at the bottom right, you will see what are the recent news. And recently there's earnings which resulted in the gap up. So if you're curious, you can also look at it and find out, oh, why did it gap up? So let's take a look. Recently, Google, the company known as Alphabet, the earnings sales jump, initiated dividend, and additional $7 billion of buyback approved. So it gapped up, and this is more from the fundamental news point of view. So looking into the chart, I have my technical analysis here. This stock has been in an uptrend. Google has been in an uptrend, and around the price of 130 to 140, my clients and I have been talking about it. I believe some of you are in this community, and we do chat a lot about Singapore and US stocks. So really thank you for keeping the relationship. You guys keep me on my toes, and I'm grateful that I get to be part of your trading journey. So around this period, some of you have already entered, which is good. This gap up was honestly unexpected, as well as the gap up due to the earnings. But of course, we know the reason for the gap up. So technically speaking, it is in an uptrend, and it's not surprising that it's pulling back because it is at the upper part of the uptrend. So for the people trading Google, you can consider partial profits, or you can consider trailing your stop losses. For those of you who are looking more at the fundamental side of things, the reason why my clients and I talk about the fundamental side of things of Google is because of this, and I'd like to share this with you as well. Look at the free cash flow. The 5-year compounded annual growth rate is 24%, close to 25%. So on a 5-year compounded annual growth basis, it is really very impressive. Look at the management. The return on invested capital is a high double figure, 24.9%. That's about 25%. And the return on equity is 27.36%. The total debt is 29.9 billion thereabouts, and the free cash flow is more than enough to cover it. So in terms of management, capital allocation, I would say the managers are doing a great job. We talked about the fundamental point of view, and we saw that the cash flow grew at about 25%. So using a discounted cash flow model, the intrinsic value is about $184. And Charlie Munger, Warren Buffett, they always say this is it's better to buy a wonderful company at a fair price than to buy a fair company at a wonderful price. So I won't be surprised if even if the price goes to 180, people are still holding on to it. At least at this point of time and some months back, Google is indeed below its intrinsic value. And in my humble opinion, I would think that, oh, that is a great value buy. And technically, it's beautiful. It's a beautiful chart. And congrats to those of you who actually entered it previously. Then again, this is my own way of calculating the discounted cash flow analysis. Other websites that you can check out is Guru Focus. They also can give you the intrinsic value. Many other websites also do the same, and the intrinsic value can vary quite a bit. So usually I would like to understand what goes behind the DCF valuation, and I hope that you will do that too if you are going to rely on certain websites, understand how they derive the intrinsic value. So that's all for today. Thank you very much for your time. Trade safe, take care, and have a great week.